Welcome back. You're watching Business Lunch, and the Q4 earnings season, remember, will start in full swing this Friday onwards. Ahead of that, Sonia is right here to put together a check on what the consensus expectation is building up to be. So Sonia has hopped across to the other side to give us the entire overview. Sonia, over to you.
Well, thanks a lot for that. Q4 is expected to be a good quarter, led largely by the move in the financial as well as technology stocks. The financial companies are expected to report a good set of earnings this time. One, because of strong loan growth that banks have seen, and two, because of a low base effect compared to what we saw last year. If you look at the weaker side, autos are expected to top the charts with very weak growth this time around, due to lower volumes as well as margin compression. And the other sector that will be weak this quarter around is telecom because of intense competition that will reflect on the operating performance of these companies. In the technology sector, growth has been good, but a rupee appreciation of 2% quarter on quarter is what could be the headwind for the technology sector. And finally, cement companies are expected to report higher growth, aided by lower costs and higher realizations. So this is the consensus estimates that I've got, from a lot of brokerages. But just to give you some individual, specific estimates, Kotak has put out a report where they expect a 56% year-on-year increase in the net income of their coverage universe. This will largely be led by banks. Stripped of banks, it's just a moderate 6% growth that they're expecting in Q4 of FY19. Deutsche Bank says that it is financials and technologies that will lead from the front, so they echo the sentiment that Kotak has put out. They also believe that telecom, materials and consumer discretionaries will report muted earnings this time around. JM Financial says for the Nifty 50 companies, the Q4 FY19 EPS is likely to grow by 17%, aided by a strong growth in financials as well as in healthcare. Nomura has put out a note where they say that corporate banks like ICICI Bank and Axis Bank are expected to report a 20% growth in operating profit this time around, leading the overall earnings growth. However, Q4 will definitely separate the men from the boys in the NBFC space. So while companies like Bajaj Finance will do well, the housing finance companies will see builder book stress impact their earnings. Finally, Kotak has put out an EPS estimate for the Nifty 50 index for FY20. It stands at 641 rupees. So that they are valuing the Nifty at 18 times FY20 earnings. Back to you.
All right. Thanks for that, Sonia. So those are the key expectations coming in from the earnings season this time round. Now let's shift focus to the deal street, and especially the NBFC space where deals are abuzz all time round. And Shriram Group is the focus right now. Those stocks are in focus as sources tell us that Shriram Transport and Shriram City Union Finance may merge together. Abhishek Kothari, who tracks the group closely, joins in the studio with more details on that. Abhishek, what are your sources telling you?
Well, Nisha, according to sources, Shriram Capital, actually they announced yesterday that Shriram Capital may merge Shriram Transport as well as Shriram City Union Finance both together. Now, sources tell that, the move is being done to create shareholders' value at the holding company level, that is Shriram Capital. Now, the merged entity will not need additional capital for 1 year because if you look at Shriram City Union Finance, the overall Tier 1 ratio is close to 23%, while for Shriram Transport, it's at close to 15% level. And the other fact is that Shriram Transport book is now quite large. So borrowing constraints are there from banks because banks have an exposure limit which is hit in terms of, a single product financing NBFC. So if these two merge together, that is Shriram Transport as well as Shriram City Union Finance, banks will be able to lend more to the diversified NBFC as it will come under one roof. Piramal Enterprise is also in talks to sell down its stake in Shriram Transport as well as Shriram City Union Finance. Remember that it holds around 10% each, both in Shriram Transport as well as Shriram City Union Finance. Now, Piramal is likely in talks with KKR for the same. KKR has done its due diligence on the Shriram Group itself, and they are interested in picking up stake only in the listed entities, that is Shriram Transport as well as Shriram City Union Finance. Any deal, whether you merge Shriram Transport and Shriram City Union Finance and Piramal selling its stake to KKR, will take a couple of months to fructify. So by June end, we should be hearing more on this. Shriram Transport wrote to us that these discussions have been going for quite a long time and there is no new development as of now, while we are still awaiting comments from Shriram Capital as well as Piramal Enterprise and KKR. Back to you.
All right, thanks a lot for that. Well, that's on that impending merger whenever it comes through. But moving on to Jet Airways resolution front, there are no takers, it seems, for lenders' stake in Jet Airways. On day one, at least, there were no takers. The SBI-led consortium of banks had invited bids for the airline, and the lenders are planning to sell up to 75% stake. Ritu joins in now to give us an update on that. Ritu, today is the last day for submission of the expression of interest.
Jet's fate hangs in balance as the deadline to submit expressions of interest to acquire stake in the airline ends this evening. And as we have been reporting, several private equity players as well as some strategic players could potentially look at bidding for the airline. So we do understand that banks have reached out to the likes of Air France, Delta Airlines already, and even Qatar Airways is set to have shown an interest in acquiring stake in the airline. Among private equity players, we have the likes of TPG, Indigo Partners, KKR, and even NIIF as potential bidders. Jet's partner Etihad is also said to be in talks with the lenders to potentially acquire up to 49% stake. But do remember, lenders are looking to sell anywhere between 31 to 75% stake in Jet Airways. But if the bid process is not successful, they may be forced to look at other options like the NCLT to revive Jet Airways.
All right, thanks for that, Ritu. But of course, till 6 p.m. today, the expression of interest may come in. So it could be a tactical move by some of the aspirants to give the expression of interest in the last hour. So we'll see that. But also remember that the Jet Airways board meet for today has been called off. And sources suggest that the board meeting is postponed till tomorrow. And meeting will be held after the expression of interest are submitted, or at least that deadline expires today. Now, let's take it forward to another big development of the day, which is going to be the biggest political hot potato in the upcoming elections. In a big setback for the government on the Rafale case, the Supreme Court has rejected the government's argument, saying that the stolen documents from the Defence Ministry are admissible as part of the review petition. Our colleague Ashmit joins us now to tell us all that transpired at the courtroom today on this matter. Ashmit.
Right, so big setback coming in for the government. The government will not like this one bit coming just a day ahead of the start of the Lok Sabha elections. The Apex Court rejecting the government's argument and holding that the three leaked documents, the three file notings from the Ministry of Defence will in fact be a part of the review application that will be heard by the Apex Court, and in doing so dismissing the government's position. Now, let's not forget that the government fought tooth and nail. The government had argued vociferously before the Apex Court how these documents pertain to national security, as to how they're protected under the Official Secrets Act, and that not just that, they had also threatened action against the very petitioners for citing these documents in the first place. This, of course, was met with some interesting comments and questions that fell from Justice K.M. Joseph as well as Justice Gogoi. The petitioners on their part, of course, had argued that if there's a larger public interest at play, even if the documents have been secured through mischievous means, they need to be considered by the Apex Court. And on the back of all of these exchanges and arguments, the Apex Court has held today very clearly that the three file notings in question, the three documents in question, will be heard by the Apex Court, and that the review applications will be heard on their own merits. Now, what's interesting, why are these file notings so critical? Well, these are the file notings which were first leaked to the media and then subsequently cited here in the petition. They raised some very tough questions and serious questions as to why there were parallel negotiations being done by the Prime Minister's office, as to questions over how there was a waiver of sovereign guarantee, which is a norm for intergovernment agreement. This too is an intergovernment agreement. Why there was a waiver in the first place of a sovereign guarantee? These are the questions that in fact came to light. These are the new facts that emerged post the December 2018 judgment, which had given a clean chit as far as the Rafale deal is concerned. And it is in light of these documents, these tough questions, that the Apex Court will now resume hearing of these review applications. So again, tough times, tough issue, and a definite setback coming in as far as the government is concerned, adding to the political fodder just one day ahead of the Lok Sabha elections.